Yes, sir. So, before we begin this session, let me just give you an introduction. So, Arun Mantri sir is a CA by profession and also a stock market expert, and has been a stock market expert for many years. And sir is going to be discussing on a very important topic. We all agree that Nifty and Bank Nifty, like trading in Nifty, especially expiry, is very tricky, very volatile market. Lot of scenarios can be created. So, sir will walk us through the steps on how we should trade in Nifty during the expiry. So, over to you, Arun Mantri sir. Over to you, sir. You can take it from here.
Okay, thank you very much. So today's session, it will be mostly on the expiry trades and how you should trade on the various expiries. So thank you very much. And it will be a short session, but it will be a very good information-based one. So one can have a great information from this. So just to give you a glance, what is expiry right now is there are 5 to 6 kind of expiries which are there in the current market. If you know, every day there is an expiry in the market, and every day there is an opportunity for all the people. Again, I will repeat it in Hindi as well. देखिए expiry every day अभी market में होती है, Monday to Friday every day there is expiry, and Monday it is a mid cap Nifty expiry. Tuesday it is financial Nifty or Fin Nifty. Wednesday it is a Bank Nifty expiry. Thursday it is a Nifty expiry, and Friday it is a you can say Sensex expiry. So almost every day we are getting opportunity to trade in the market, and it is a golden period where many people are still not aware of the options. And if anybody is aware of the options, this is a golden time to make quick money in the market. No doubt, F&O trading or the futures or the option trading is, you can say it is very risky. And if you have a proper knowledge and proper risk management system, then only you should enter into this market. And as a proper disclaimer, again, I will repeat, if you are new to the market, if you are never traded in the market, or if you are never done a trade in the futures and options, better to learn first or just have a close glance on the options basics, and then only enter into the market. Otherwise, mostly 90% of the time, the traders are losing the market, as it is also shown in the SEBI circular. I know many of you are aware that SEBI has given a circular. It has given a announcement that 90% of the traders in F&O are making losses. So it is a proper disclaimer again. If you are new to the market, better stay away from the derivative markets for few days. First, learn how to enter futures and futures contracts and option contracts, and then only we can do a seamless trading. Again, I will discuss some of the basics of the options trading on the expiry day or around the expiry. Secondly, I will give you some golden rules which you can apply on the expiry day, or you can apply during the expiry trade. Third is how to make a proper risk management into the market during the expiries. These three are the major points which I will discuss in the today's webinar. Again, I'll share my screen. This is what you say. It is a proper my trading software. You can see this is a Nifty chart from last you can say from last 8 days. These are the candles, and there is no move in the market. From 23,200 to 23,550 or 570, there is almost 300 points move in the market. 300 points is nothing but 1.3% of the total move of the Nifty. Still, there is no move in the market, but still options expiry is happening daily, and daily people are trading into the options. So what is the basic rule is whenever you are doing the options, always have a view that the markets are trendy, and whenever you buy the options, market should be trendy. Either it can be on the lower side or the upper side. You can note down the rules. First rule is whenever you are buying the option, either it can be put or call. The market should be trendy. Either it should be on the buy side or it should be on the sell side. So whenever you are taking any options on any stock or any index, be sure that markets are trendy. It is not into the consolidation. If you are buying any options in the consolidation market or in the sideways market, the market which is there from last 5 days, 90% of the time you will make up losing the money, because either if you buy the call or if you buy the put, both of them will become zero at the expiry. And if you have noticed, yesterday also we are given a short triangle in which we have sold the put and sold the call, and both the options have become zero in the today's trade, because we had a view that market will not move in the either direction. It will be there in the range of 100 points. So first rule is, whenever you are trading into the options, trade in the trending market if you are buying the options. If you are selling the options in the consolidation market only, you should sell, not into the trending market. Trending means either it should be continuously going upside or it can continuously going downside. So never trade into the market which are there into the consolidation, or never buy the options whenever the market or the stock is into the sideways range. Now, how many stocks are there in F&O? There are almost, you can say, 190 to 200 stocks which are there in the F&O. You can trade in futures and options. And almost you can say there are 5 indices which you can trade in options and futures. Again, I will repeat. Nifty, Bank Nifty, Financial Nifty, that is a Nifty, Mid-Cap Nifty, and the Sensex. These are the 5 major options where you can trade. Nifty IT is not having any volumes, so majorly people will not trade in Nifty IT. But Fin Nifty is the new expiry which people are more interested. So there are 3 expiries which we usually give strategies on. That is a Nifty strategy, Bank Nifty, and Fin Nifty. So these are the 3 index strategies where you can work upon. So first tool is you should buy the options whenever markets are trendy, and you should sell the options whenever the markets are in the consolidation mode. Second, when to enter the trade. So first of all, on the expiry day, better you take a position 1 day before the expiry, or you take the positions after 1 hour of a trade on the expiry day. Again, I will repeat, if you want to do an expiry trade in a trending market, if you want to, I am taking all the example that we are on the buy side, not sell side. Sell side will come later. So whenever you want to buy the option of the indices on the expiry day, you buy options only when the markets are trendy, and try to buy 1 day before, or at least around 3 o'clock or 2:30 1 day before. Or if you don't want to take an overnight risk, always buy the options after first 1 hour of trade. Because usually what will happen is in the first hour of trade, there will be many, you can say, new traders or the investors which will be booking the profits or exiting in loss during the first hour. So never trade in the market or with the options the first hour of trade. Always trade after first hour, then after 10 o'clock you can take a trade. Now, what are the options you should take in the market or should buy? Always buy the options of at the money. Don't buy options of out of the money or deep in the money. Because if you buy the options of out of the money, most of the time what will happen, if market doesn't move, the total premium will become zero. So the third rule for the market is, whenever you're trading in the options, try to buy at the money calls. I will give an example. Right now, Nifty is trading around 23,550, as you can see on the screen. This is the live software. 23,562 is the current market price of Nifty. So if you are bullish on the market, take 23,550 call or 23,600 call. That will be the best option strike to buy. So and if you are bearish on the market, either you take 23,550 put or 23,500 put. Because if market comes down or if market goes up, these are the options which will move very fast, because they are near the current market price. So the fourth rule is, whenever you buy the options, buy at the money, because the movement in the at the money calls or puts will be very high whenever markets are trending or whenever market gives move. So again, I will repeat. First is buy the options whenever you are buying the options. Buy in the trending market. Don't buy in the sideways market, the market which is right now what we are witnessing in from past 4 days. So this is not the market we should go and buy the calls or put. Second, you should buy the options either 1 day before, after 2:30 or 3 o'clock for the expiry trade, or on the day of expiry after 9:30 or 10 o'clock in the morning. So this is the second rule. Third rule is you should always buy the options of at the money or just out of the money, not deep out of the money, because usually what will happen is deep out of the money calls or puts, they will be very cheap, because usually people will not expect a big move on the expiry or before the expiry. So what will happen is, if you want to trade in the market, first form a view whether you are bullish or bearish. If you are bullish, try to buy the at the money calls or just out of the money calls. If you are bearish, try to buy the at the money put or just out of the money put. So that is a third thumb rule. Fourth is always have a stop loss and target in mind. Never leave options to become zero. See, what will happen is we are also there in the market from past 12, 13 years. Usually, what people will do is what they do, they buy the options and they will leave the options for becoming it as zero. Whenever you buy the options at any premium, always have a stop loss or target in mind. Now, stop losses can be the premium stop losses or the level stop losses. So what we do is usually, I'll give a practical example. This is the intraday chart of Nifty. So if we are bullish on the market, we usually keep a stop loss of around swing low, that is here, 23,440, or if you want to keep a small stop loss, then 23,500 will be the immediate stop loss if you are on the buy side. And if you are on the sell side, usually we keep stop loss of a day high. If market goes above day high, usually we cut the put or call positions. So by seeing the pivot levels or by seeing just high and low also, you can take the positions on the expiry day. So that is the thing. Fourth rule, that you should always have a stop loss and target in mind. Second is whenever always have a look on the open interest of any strike. I will give you a golden example. Right now, the market is trading about 23,500. What has happened in last 3 days is both calls and put writers, they are trapped in the market because people were not expecting market to go above 23,500 and people were not expecting market to go below 23,200 as well. So what has happened is 23,500 calls writers are now trapped because market price is trading above that. So whenever you see that market is crossing the psychological level, either it can be 23,400 or 23,300 on the upside, or whenever you see when the market is crossing the downward level of any psychological level, either it can be 23,500 or 23,400, you can take that trade, keeping a stop loss of days high or day low. Again, I will repeat. Whenever the stock index prices tries to cross any psychological mark on the daily charts or on the spot price, you can take the trade on the same direction where markets are going. If markets are going higher and if Nifty crosses 23,600 today, so you can take the call positions on the higher side. You can expect some more momentum. And suppose on the retrospective, if market closes comes below 23,500 and it started falling below 23,550 as well, you can take a trade on the lower side. So these kind of trades you can do on the expiry day. Usually, expiry day you will get a big move. The move can be on the other side. That is why there is a high risk on the expiry day. So this is the fourth or fifth rule which you can follow. Again, make a habit to note the highs and lows of the market. Either it can be on the yesterday's market or today's market. So 90% of the time, many people are using technical charts, so there is no need to note it on the paper and book. You can just open the technical charts and just write down the lows and highs. If the market crosses yesterday's high, you can go and buy the calls in the market. And if the market closes or if the market dips below yesterday's low, that is the right time to go and buy the puts during the expiry day. This is purely on the basis of expiry day. This is not on for the daily trading. So this is also one of the rules which you can follow. Again, if I will repeat, note down the highs and lows of the yesterday's Nifty or Bank Nifty trade. If the market goes above yesterday's high, you can go on the buy side in the market. If the market goes below yesterday's low, that is the right time you should go and take a put side of the market. Don't do any trade in between, because what will happen is like the today's market, there is no momentum. Only 50-point range is there from the continuous from the morning. High chances there will be momentum after 3 o'clock, after 5 minutes. So there can be some momentum on the other side, but still market is on the sideways there. And if you buy a call or put, both are making losses in the today's trade. So this is for today's market is typically where both calls and put writers will either lose their premium or their premium will become zero. So these are the few rules which you can follow into the market. And next is, which is the best index to trade? Usually many people are having this out. The best index to trade in the market is either it is Nifty first, and second is Bank Nifty, and third is Pin Nifty. Again, I will repeat, if you are just new to the market or just learning the options, try to make a trade in Nifty first, second Bank Nifty, and third Nifty. Third Fin Nifty, because Nifty is, you can say, it is much less volatile than Bank Nifty, and Bank Nifty is less volatile than Fin Nifty. So the hierarchy should be: first you should trade in Nifty, second you should trade in Bank Nifty, and third you should trade in Fin Nifty. Then only you can have a good trade in the market if you are new to it. Again, I will repeat it. Nifty is a good index. If you want to trade, first try to trade in Nifty, second Bank Nifty, and third is Fin Nifty. The reason behind this, Nifty, many people are trading for many years, so it is more liquid. Bank Nifty is also liquid now because many people have entered the Bank Nifty options as well. Fin Nifty, again, it is a newer index. From past one and a half year, there is good volumes, but still there is you can say erratic move in Fin Nifty during the expiry day. So if you can catch that move by just tracking high lows, that is well and good. Otherwise, Fin Nifty is bit risky to trade on expiry day. Now, once you take any trade in Nifty, Bank Nifty, or Fin Nifty, always have a stop loss. Keep the stop loss on system, because many people will say, I will have a stop loss in my mind, I will not keep in system. What will happen is, whenever during the expiry day there will be big move, either it can be on the lower side or the higher side. So the moment you start keeping the stop loss, your levels will go down. So whenever you are trading in options on the expiry day, keep the stop loss in system and keep the target also in system, because you never know on the expiry day when the moment will come. Usually the moment comes after 2 o'clock or 3 o'clock. So whenever the moment comes fast, your prices will be executed. So these are the rules which you should follow. First, if you are new into the market, trade in Nifty only. Once you get a good grip on Nifty, then go for Bank Nifty, and then third go for you can say Fin Nifty. So these are the things you should follow. Again, many people, they don't know that there are various strategies which you can build into the market. Like there can be bull call, pair call, covered put. There are many strategies which you can build into the market. So buying naked options during the expiry is good, because usually there will be good moment during the expiry. But the risk is also similarly high. You can lose your total premium, or your total premium can be doubled or tripled. So once you are done with the naked options, try some strategies. Try to sell calls, puts out of the money with to make some hedge. And again, if you are selling any calls or puts, always be in front of system, because I have seen many expiries. 2 rupees options have become 200 rupees and 300 rupees as well. So whenever you are selling options, the next rule is, whenever you sell any options, either it can be of stock or of index, always be in front of the screen. Because what will happen is, if you sell the option, if you leave the screen, suppose if you have sold the put of 23,400 and you have left the screen, if the market falls 200 points from here, your 2 rupees option, it will become at least 50 to 100 rupees. So you can lose more than what you wanted to earn. That is 2 rupees you wanted to earn, but you can lose more than 10 or 50, 20 times of the same. So whenever you are selling the options into the market, always be in front of the screen, and always keep a stop loss. Either it can be on the buy side of the options or sell side of the options, because you can save the capital of it. So this is the next rule which you should keep. You should always be in front of the screen if you are selling the option. And next is, don't leave options to become zero on the expiry day. What will happen is, many people, they buy the out of the money options in 5 rupees, 10 rupees, and they keep it, they leave it for zero. There is no use of taking the trades. If you want to make money into the market, if you want to do real trading to make the movement of the market, always buy at the money options or just out of the money options. Those are the options which will earn you good money. Suppose I'll give you an example. Suppose you are bullish onto the market, 23,570 is the current price. See, already the expiry action is started. Already Nifty has come 20 points higher. If you are bullish on the market, if you say I will buy 25,700 call, which will be available around 5 or 6 rupees, what will happen is, if market don't moves above more than 70 to 80 points, then only you will make money. Suppose if the market moves only 30 points, you will not make any money in the 23,700 call, because it is near to the expiry. So if you are bullish onto the market, buy at the money call or at the money or just out of the money call. Suppose similarly, reciprocally, if you are bearish on the market, buy the at the money put or just out of the money put, because that is the option which will yield you more money and that will give you more moment. So selection of stocks, strike price is very important on the expiry day. Don't play a gamble that you will buy an option of 10 rupees and it will become 100 or 20 rupees. 1 out of the 10 times it will happen, but other 9 times it will become 0. So if you are just bullish or bearish onto the market, just buy at the money calls or put. So these are the things we should keep it into the mind. Again, I will repeat all the rules. Trade only in the at the money calls or at the money puts on the expiry day. Second, you should take a trade either in the last hour of the 1 day prior to the expiry. Suppose today was the Nifty expiry. I should have taken the trade on the last hour of the Nifty in the yesterday's trade, or do the trade after the first hour of the today's market. This is the second rule which you can take it. Third is wait, always note highs and lows of the market of the yesterday's trade and even today's trade. So whenever Nifty crosses those high or those lows, take the trade in the same direction. Fourth is always try to trade first in Nifty, second in Bank Nifty, or third in Fin Nifty if you are just new to the option, because Nifty is much less volatile and you can easily learn from those options. Next is always keep stop losses and targets onto the system. Specifically, when you're selling options, don't leave the screen because you never know when market will give big momentum. So whenever you're selling the options, keep the stop losses and targets both in system. Either it can be stop loss on the lower side or stop loss on the higher side. Specifically, when you are selling, if you are buying, then it's okay. If you don't keep also, you will not lose more than your premium. But still, I'll suggest keep the stop loss and target even when you are buying. But specifically when you are selling, always keep stop loss into the system because that will save your capital. Again, many people usually they say what is the minimum capital required to trade in options. See, what we have experienced from last many days is minimum capital you should have is at least 1.5 to 2 lakhs into the market, because usually what will happen is you can make a two or three trades during the expiry day. So at least have a 1.5 to 2 lakhs of the money into your account and try to close the positions in the intraday as well. So this is the minimum capital requirements. There is no thumb rule of this, but usually on the basis of our experience, 1.5 to 2 lakhs is enough if you are on the buy side. If you want to just trade in 3 to 4 options, that is enough for the market. So these are the things which you should keep in mind. Again, many people are fond of Fin Nifty expiry. Fin Nifty because it gives erratic movement like it has given yesterday. I'll show you the chart. This is a Fin Nifty. You can see here, this is a move from 22,850 to continuous 23,150. So usually these kind of moves comes on the expiry day. So that is why I always say this was the high during the day. So once this high is crossed, there has been exceptional move. Similarly, if this in the today's trade, if 23,080 is crossed, which is the today's high, there can be some exceptional move in the tomorrow's trade as well. So that is why always keep a note of high and low of the market. See, in the yesterday's trade as well, once the high is crossed, there has been move of more than 300 points. Similarly, in the today's trade, there is no move because today's the market is into the consolidation mode. So don't get fond of the new indices. Better go for Nifty or Bank Nifty. Those are the best things to trade. And don't do higher. You can say more than your capital requirements. So what will happen is usually people they trade of 10 lots or 20 lots at a time. So try to minimize your risk. Try to take less lots. Do start trading by 1 or 2 lot, and later once you get experience, later you can trade with multiple lots. So try to reduce your positions whenever market are volatile. If markets in the trending mode, everything is bullish, the markets have given breakout, then you can trade higher trades. But whenever market is into the consolidation mode, try to trade less into the market and try to trade less lots. And second is try to sell options as well to hedge. And whenever you are selling options, you should be in front of the screen. Again, selling options attracts more margin. That is the rule of the SEBI and the exchanges. But usually, whenever you're selling options, there is a high probability that you will make money or you will at least hedge your positions. So these are the rules which you should follow on the expiry day. And whenever you trade on the expiry from next week, Follow these rules, follow these one by one. These are the 5 to 6 minimum. You can say these are the basic rules which we follow, and we have generated good fruitful returns from it. So if you are doing an expiry trade, just wait for first hour during the day. Markets usually what will happen is it will get trendy after 10 o'clock. Usually what people will do, they will start trading from 9:15 during the start of the market, and most of the time they will hold that position till 3 o'clock. So after 10 o'clock only, take your first trade once the trend is decided. If it is on the higher side, you can trade it on the buy from calls. If it is on the lower side, you can trade it from the puts. So these are some basics which I wanted to discuss. It was a very small webinar, and these are the things which you can keep it in mind when you're trading in options. Always have a target stop loss. That is the first rule into the market, and try to trade less lots during the day. So once market gets trendy, you can take multiple lots. Now, these are the things you should follow. If there are any questions, I will take it one by one.
Yes, sir. Thank you so much, sir, for the wonderful session that you have conducted and the important information that you have given us, like how we should plan our setup, because it's very important to plan our setup. And a lot of traders, as we see, they go into stocks and they see about the Nifty and Bank Nifty, and they try to enter, without any precautions, without understanding the options, how options work, how the premiums work. So thank you so much, sir, that you have not only told us how these things work, but you have also given us step-by-step plan on how we should follow, be it the expiry day. So thank you once again. And yes, anyone who has any doubts, any queries, please ask in the chat box. Sir will be answering. I think so, sir. We'll just wait for a few more minutes, right? In the meantime, also, I would like to, in the chat box, I'm going to be putting the feedback form. Just want to know your inputs to all the attendees. I just want to know your inputs on what kind of sessions should we keep ahead and how you all want the sessions to go ahead. So because the important thing at Bigol is that we want that you all learn how to trade, you all learn how to understand the markets, and we want to come up with such kind of topics and such kind of videos for you all. So that's why I'll be in the chat box. I will be putting the link for the form. So I would just request everyone to just take. It will hardly take a minute or so. Just please fill the form. Okay, I'm just putting the. Also, till then, if you all have any queries, you all can let us know in the chat box. Okay, I've attached the feedback form in the chats. Okay, so please check it out. Shell Shukla is asking how your algo work. So Shell, Mr. Shell, I would like to tell you that we have various kind of algos. If you want to do option selling, we have got algos for option selling. If you want to do option buying, so we also have strategies for option buying. We have ready-made strategies. Like if you want to make strategies for yourself, like based on the charts, based on the indicators, so we can do that here. Also, if you want fully automatic strategies for option buying and option selling, we also provide that here. Arun sir, Arun Mantri sir, Tyagaranjan ji is asking a question. Sir, how to identify big movement in daily candle chart, even a regular day?
See, that is a good question. The first rule of the market is also whenever 80% of the traders they buy options only. So that is a good question कि आपको options buy कब करना है or when you should enter any stock. See, what will happen is usually people they create their own rules. So my thumb rule is whenever you are trading into the market, if any if the high of the last days is crossed, either it can be of the stock or of the index, then you should be on the buy side. And if low of the last days, you can say when it is violated, you should be on the sell side. Either it can be on the stock or it can be on the index. This is the first rule. This is the best trade which one can trade. Second is I already told that you should not trade in the first hour of the trade. Wait for the market to consolidate. Wait for the new traders or the, you can say, the traders who who are not having the patience to wait for their profits or losses. Usually they will exit in the first hour. So when after 10 or 10:50, there will be high of the market and there will be low of the market. So whenever that high is crossed by the indices or the stock, or whenever that low is crossed by the stock or any indices which you are tracking, you can take the trade in the same direction. These are the two main rules where you can see that you will get a good trade. It can be the first hour of the trade high. When it is crossed, you can take the trade, or whenever the low is violated, you can take the sell trade, or whenever the high of the last day's trading high is crossed, you can take the buy trade, or whenever the last day trading low is violated, you can take the sell trade. Now, many people will having the doubt, if the stock remains in the mid of the range, then you should not take any trade in that. Better you identify the stocks which are trending and which are having more volumes and which are crossing the last day's high or the first hour candle's high. So that is the best thing. That is a minimum thing you can do. And if anybody knows the technical charts, if anybody know how to use the technical charts, that is well and good. There are more strategies which we will discuss one by one whenever we will do the next webinar. So these are the two simple strategies which you can follow. Once the high of the first hour is crossed, you can take the buy trade, or whenever the high of the last day candle is crossed, you can take the buy trade. Reciprocal, when the lows are violated, you can take the sell trades. These are the two strong strategies which you can follow. There are more various strategies. We'll discuss one by one whenever we take more webinars. So these two strategies you can work it upon, and you can just test it on the paper first, and then you can do the live trade.
Thank you so much for that, sir. What about the others? Do you all have any more queries? I would just like to again remind, I've attached the feedback form for you all to access it over here on the chats. So please feel free to fill the form and let us know your feedback on these sessions. So we'll wait maybe for a few more minutes, right, sir? We'll wait for another 2 minutes. If any more queries, you all can let us know. Others, we will end the session. Right, sir?
Sure.
Yeah. Okay, there is a question, sir. If you see today's Nifty 1 minute chart randomly volume increase, in this case, how we can conclude breakout or breakdown, sir?
First of all, you should never see the volumes in Nifty, because the Nifty volumes are, you can say, they are not, you can say they will not give a clear picture. If you want to trade in Nifty, see the you can see the open interest in derivatives, or see the volumes in the futures contract. So don't see the volumes in the spot. You first better you see the open interest in the Nifty. If the price is going higher and the open interest is increasing, that is the first indication that market will go up. And if the price is going lower and open interest is increasing, that means people are going short. So these are a few rules which you can follow. But secondly, never see volumes in Nifty. There is no significance of volumes in Nifty. But if you are trading in Nifty, open interest and the trading volumes in the futures contract, that is very important. So that is the thing you should follow.
Thank you so much, sir, for that. So I'm guessing no more queries are there. So let us, I think so we should end this session over here. Okay, sir?
Sure. Okay.
Yeah. Okay. Thank you so much. Thank you so
Thank you
much,
so
sir,
much.
again for this wonderful session. And I'm sure that many more sessions are there ahead when where sir will also show us, how we should understand the market, how we should react to the market, how we should take the trades in a professional way. So I'm sure sir will give us all the knowledge in the upcoming sessions. So please attend these sessions one and all. You will definitely gain a lot of knowledge. Sir has been in the market from many years, and he's going to be sharing his experience here with us. So once again, thank you so much, sir, for today's session, and thank you so much to all the attendees for attending this session. And yeah, we'll end this session there. Thank you so much, Banana.